Hello guys, this is Mega FX, and in today's tutorial we're talking about liquidity sweep trading strategy. How you can form a strategy around liquidity sweep. Liquidity sweep is one of the most powerful trading strategy you can add to your profile as a trader because it is very powerful. Liquidity sweep, you notice that market gives an aggressive movement after liquidity has been taken. Market tend to give massive movement after we've taken some sort of liquidity. So for you to master liquidity sweep, you need to obey some certain rules. For you to have a successful liquidity sweep trading strategy, you need to obey some certain rules. What are the rules? When you come to your chart, make sure you know how to spot where liquidity lies. You can find liquidity on old lows and old highs, fair value gap, order block, any higher time frame PDRA, any higher time frame point of interest. It can be support and resistance. Just know where to spot liquidity. If, for example, let's take for example now, market is moving, we have market moving like this, for example, and at a point you notice that after we break structure, on retracement, you notice that market sometimes will be consolidating like this, and after sometimes you will see something like this. The market will, let me see, yes, something like this. You notice that market will just sweep everything here. Look at it, come up and continue to go higher. You understand? What will come to your mind is that it's either market comes back for a fair value gap or another block, other block beneath this consolidation. So this consolidation now becomes the trap. If you enter early, you notice that market will hit your stop loss. After hitting your stop loss, market will continue to go to your direction. Why? Because you fail to point out where liquidity lies. You understand? This is market now sweeping internal range liquidity, because here now, this point now, if you check this range from here to here, here is A, here is B, you notice that from A now, here, and B, this is a range. You understand? External range, external range. But anything within, anything inside this range is called internal range liquidity. So market sweeping internal range and continue the upward movement. Another type of liquidity sweep you will observe is market doing something like this, and at a point you notice the market comes here and be giving you something like this and sweep, continue higher. You understand? Here now becomes trend line liquidity. So market can use any form to grab liquidity. So your ability to spot it as a trader makes you a profitable trader. Your ability to spot where liquidity lies before it happens. So before you make liquidity sweep a strategy, you need to point those areas, mark down those areas. You can go to daily time frame, 4-hour time frame, weekly time frame, and mark those old lows and old highs, or fair value gap. Fair value gap you see on daily time frame is very powerful. Fair value gap that appear on weekly time frame, they are very powerful. So I have two ways in which, if you see liquidity sweep, two ways in which you can take the trade. One is, let's assume I was having something like this before, something like this, and market is coming back, and here now becomes, if you have something like here is now is an old low, here is an old low, you understand? Then if market comes back like this, sweep here, sweep this old low and close above, you understand? On retest, I take the trade. How? Let's assume as market is coming back to this point, I'll be watching the last leg that we break, that we sweep liquidity. I'll be watching whether there is a fair value gap around the leg. So what I do is that once market close above that fair value gap, becomes inversion fair value gap, then I use it to take my entry. That is one of the things I do. Another thing you can adopt is looking for two assets that are positively correlated or negatively correlated. That is SMT divergence. With SMT divergence, you can spot whether a particular move is a fake move, is a liquidity sweep. How do you do that? Let's assume now you are using Nasdaq and S&P 500, for example, and two of them are approaching a resistance, for example. You know that when they are approaching a resistance, the best thing you will do is looking at two of them. Let me duplicate this. You're looking at two of them when they get to this particular resistance to know if two of them will break the resistance. Will give you a valid market structure break or market structure shift. You understand? As in break of structure, sorry. So if on getting to this place, if one of them breaks and the other one fails to break, you know that this is not a break of structure, it's just a market liquidity sweep. So using SMT divergence, two assets that are positively correlated or negatively correlated, you can be able to spot whether a move, a break, is a valid break or is a liquidity sweep. If two of them will give a break of structure, you will see two of them like this, giving you a break of structure. But if it is an invalid move, you see that one of them will fail. On getting to this point, one of them will slow down while the other one sharply takes liquidity and later comes back into the range. You understand? You take this self to the downside. This is what we call bearish SMT divergence. Another one is that if you don't want to use it like that, if you don't want to use two assets that are positively correlated or negatively correlated, the thing you do is that after you see a something like this and you see a break of structure, always be patient. Always be patient, because in most cases, if we see this kind of move, if you watch closely, you notice that there is always a bullish fair value gap that appears after the break of structure like this. Then be observing whether that fair value gap will be able to hold price. You understand? Don't just take trade when you see breakout. It's very, very dangerous. So observe whether that fair value gap, once if price violates the fair value gap, close, not weak, close below the fair value gap, then you know that this particular move is not going to hold. You understand? If price violates the fair value gap, then you use the fair value gap as an inversion fair value gap to continue the market to the downside. So this is the two ways. Let me show you some examples on my chart. This is USDT. This is crypto. Yeah, I'm using this in conjunction with the CUBTC. They are both positively correlated. I want to bring your attention to this point. Look at where this is an old high. Then you notice what market did here. Market came, swept, look at it, sweep liquidity here. Look at what I was telling you before. You notice that before market swept this buy side liquidity, you notice that we created a bullish fair value gap here. Are you seeing it? But look at what happened. Market broke above, C came back, violated the fair value gap, turning this fair value gap. Now look at now we have fair value gap, we have fair value gap. You understand? So if you go to lower time frame now, you see how you would have taken this entry. Let me just go to 1 hour time frame to show you how we would have taken this trade. Okay, this is on 1 hour time frame. This was the high. Then look at, you notice that we had a high here, we broke above it, we see came down, created some internal structure here, still broke the high, this particular high and this one. If I show you the other pair now, the second pair that is positively correlated with this one, you notice that we have SMT divergence here. Let me quickly show you so that you understand what I'm saying. Look at the second one, CUBTC. I want to look at that point. I want to look at that place. Let me go to the list time frame so that I'll be able to mark it. Let me clear all this. Okay, I think this is the place. Yes, this is the same high. Look at that fair value gap I told you before. I showed you on CUSDT. Notice that we also have bullish fair value gap here, and when market came down, we also created the fair value gap. Then let me go to 1 hour time frame so that you see what I'm talking about. This is the high as well. Then look at that high. I told you that we have some sort of SMT divergence there. Look at that. You notice that on CUSDT, we took out this high. If you observed, we took out this high. Are you seeing it? Giving us bearish SMT divergence. Look at it. Are you seeing it? You know that we created that internal structure here, took it out, but we failed to take out this high the way we took it out on USDT. So this would have been your entry on 1 hour time frame. Look at where we have market structure shift. We have market structure shift here. We also have change in state of delivery here. You understand? So you would have taken your entry here at this point. Put your stop loss at the high of the SMT. Then you would have targeted anywhere you want to target. Me, I would have targeted this fair value gap, this 1 hour fair value gap. You understand? Look at how it is on CUBTC. Then look at how it is on CUSDT. Let me show you. These two pairs are positively correlated, and their correlation is it has high percentage in correlation, even more than Nasdaq and S&P 500. If you doubt it, go and try it. If you doubt it, I dare you to go and try it. Go and check it out. USDT and BTC. Look at it. Very powerful. They move in a very similar way, more than how Nasdaq and the S&P 500 does. You understand? Look at the SMT here. So this is one. I want to bring your attention to another one. Let me show you another place where SMT divergence also happen. Or first of all, let me show you. You know that when we had this drop, we also created bearish fair value gap here. Let me show you what happened here. Market came back to the fair value gap, gave us liquidity sweep here. Look at liquidity sweep here. After market swept liquidity, you notice that we had dropped to the downside. If you go to 1 hour time frame also, you also see where you would have taken the entry. If I don't see it on 1 hour, I go to 2 hours. Okay, look at it. After this is the main daily time frame sweep. We also have another sweep on 2 hours time frame or 1 hour's time frame, look at it. I would have taken this trade. Then we have, look at, change the state of delivery here. This up close candles. Look at when we violated, we didn't violate it here. We didn't break below it here, but here on this candle, we broke below it. So your entry would have been here. Your entry would have been here. Look at it. You started in maybe 1 to 2 or so. This is 1 to 2. You understand? So let me show you, even on this fair value gap, on this fair value, I'm still on this USDT. On this fair value gap, I want to show you that inside this fair value gap, we still created SMT divergence. Look at it on USDT. See, I want you to look at this high. Notice that market swept this high. But let me go to BTC. I want to show you something. Let me clear all this. This is the same fair value gap. Are you seeing it? Look at that high that I was showing you. Notice that market failed to sweep that high. Are you seeing it? Bearish SMT divergence. So with this, you already know that this fair value gap would hold. You understand? You understand what I'm saying? With this SMT divergence inside this fair value gap, you already know that this fair value gap will be valid because we already have liquidity sweep here. Look at it. We already have liquidity sweep here. But in the other one, we failed to sweep liquidity. You understand? So if you also try this pair, you understand what I'm saying. You understand what I'm. Let me show you another example where I will show you here. Look at this point. You know that if you look closely, notice that when we have this break of structure, we have fair value gap here as well. This tiny fair value gap. Look at it. Are you seeing it? We have fair value gap here. Oh, this is on daily time frame. But I want to show you what happened inside this fair value gap. This is BTC. If I check this low, are you seeing what I'm seeing? You notice that we have liquidity sweep. Look at the liquidity sweep here. Look at where we swept liquidity. Are you seeing it? We swept liquidity here on BTC, but let me go to USDT and show you what happened there. Look at it. This is the same fair value gap. We have break of structure at this point. Look at the fair value gap. Look at it. Are you seeing it? Then let me remove the fair value gap and show you something. Look at that low. Let me bring it up so that you see. Look at that low again. You notice that. Let me put it where. Are you seeing it? Look at it, guys. Are you seeing that we have bullish SMT divergence here? Are you seeing it? This is already giving you the sign that the fair value gap is going to hold. You understand? And after that, you notice that we had an aggressive movement to the upside. You understand? So using two assets that are positively correlated will give you an upper hand to trading, to making liquidity sweep a strategy. You understand? If you backtest this chart, you will notice that we have so many guys. Using these two pair, they are very powerful. It's not as if using others they are not powerful. Nasdaq and S&P 500, they are also very, very powerful. You understand? But I like using this pair, this particular crypto. And this is what I trade. I trade USDT. That is my pair. You understand? So I want to lastly let me show you, because this video is getting so long. I want to bring your attention to this low. We have fair value gap here. You notice that market tapped into CUSDT, price tapped into this fair value gap, violating this low. taking some sort of liquidity below this low. But let me show you that particular low on BTC and see what happened there. Look at it here. That same low. Have that same low here. Are you seeing it? This is fair value gap here. That same fair value gap, you notice that market fails to come down to that particular fair value gap. Look at it. You understand? So the best way to make liquidity sweep a strategy is you looking for two assets that are positively or negatively correlated. You understand? And before you take a trade, before you execute, make sure you have liquidity sweep, and let that liquidity sweep come from a higher time frame point of interest, fair value gap, old lows and old highs. If you find this video helpful, don't forget to like, share and subscribe, then turn on the bell notification, because I will also be dropping another video about liquidity sweep as a strategy. Thank you guys.